Good morning, everyone, and welcome to this latest webinar from thebusinessdesk.com. I'm Ben Ormsby, I'm one of the editors here, and I'm delighted to have a fantastic panel here today for this webinar in partnership with CMS, looking at developing purpose beyond the pandemic and a real estate reset. Before we get on to the actual panel discussion, I'd like to invite Tanya Francis from CMS to talk us through their real estate reset report, which she'll be doing shortly. So hopefully Tanya can hear me and her screen is working. Yes, there we go.
Thank you. So for those, thank you for the intro. And for those that don't know me, I'm Tanya Francis. I'm a partner in the real estate team at CMS, based in the Manchester office. I'm going to spend just about 10 minutes to talk you through some of the findings from our latest Thought Leadership report. And it's actually our 8th annual report. And it's been interesting to study some of the trends that have shaped our sector over the last almost decade, whether that's the emergence of the international investor, the impact of prop tech, the growth of logistics and residential, and of course, Brexit. We looked at the future of the office 3 years ago in our Smart, Healthy, Agile report. And at that time, we were already talking about the changes to the way that we work and use our spaces. The pandemic's accelerated some of the trends that we were already seeing gathering momentum, and it's also focused a spotlight on some of the issues that the industry was already facing. And so as we sit here today, we're at a bit of a crossroads with the industry at the heart of the national agenda. And there's more and more focus on how and when we use our buildings, whether those are schools, offices, or retail. And there's never been a more appropriate time for real estate to reset. And that's the purpose of this year's report, looking at offices and purpose beyond the pandemic. To give you a little bit of an overview on our methodology, we polled the opinions of 250 real estate professionals who look after assets in excess of £3 billion. We carried out a number of in-depth interviews with some of the most forward-thinking people within the sector. This year, we also engaged with over 1,500 senior occupiers from SMEs to multinationals. And finally, we canvassed the views of 500 global institutional investors. So turning first to our real estate professionals' view of the market. I don't think you'll be surprised that 42% said that they were either quite or very pessimistic. But actually, considering our survey was carried out at the height of the first lockdown, I'd actually say that that was quite pleasantly surprising. And interestingly, sentiment was much worse immediately after the Brexit vote in 2016, when 64% said that they were pessimistic. Looking at things on a more geographical basis, for the second year running, there's been an increase in the number of people that think London is fairly valued, up at 41% from 36% last year. But it's a different story when we look regionally. When we asked our real estate professionals about the appetite to invest regionally, although Manchester came out ahead, as it has done for the last 5 years, there was a clear cooling off of regional investment appetite across all of the UK major cities, actually, but with Manchester, Birmingham and Bristol being the hardest hit. And they've suffered decreases between 10 and 16%. It's not really clear what the reason for that is, but it could be a direct impact of the pandemic and a view that those cities are overexposed to the office market. Turning now to asset classes, some obvious winners and losers. With internet shopping virtually replacing the high street over the summer, it's no surprise that distribution and logistics are going strong. Whereas at the opposite end of the scale, we have retail, which is at an all-time low, with only 3% of our professionals finding it attractive. And we explored the link between those two asset classes in our previous report on logistics, Box Clever. Hotel and leisure and student accommodation also suffering for obvious reasons. But on the other end of the spectrum, the perhaps not so alternative now, retirement living, PRS and healthcare all still going strong. In relation to offices specifically, there's been a drop in their appeal, with only 33% of our professionals finding it attractive. And when we look back to our very first report 8 years ago, this was actually the most sought after asset class. So it really does show how much times have changed. When we looked at our report on the future of the office 3 years ago, we quoted Rob Noel, who was then at Landsec, and he said that unless we want to take our Surface Pros and go and work in a field, we'll always need buildings. And that is, of course, true. But the question that we asked then was whether we'd continue to need buildings in the traditional sense. And with most of us having spent the majority, as it's now turned out, of this year working from home, the question's never been more relevant. When we conducted our survey in the summer, on average, most occupiers expected to have at least half of their workforce back in the office by mid-October. And it did seem that we were on track for that. But with the introduction of the tier system and then a second national lockdown, things took a step backwards. Now, hopefully with the rollout of a vaccine early next year, we can start returning to some element of normality sooner rather than later. But there is actually a really serious side to returning to work, with 82% of occupiers believing that employers should be liable if an employee contracts COVID-19 in the office, having been asked to return to work. So there's clearly a risk management issue there for both employers and landlords. And there's a link in our report to some really helpful legal guidance on that. Whatever we think, the home versus office debate looks set to continue. But our occupiers were really clear, actually, that a blended combination of the two is the right one. And as you can see from this slide here, that arrangement beats anything else for innovation, productivity, and motivation. But luckily for us in the real estate sector, nothing beats being in the office for integrating with colleagues, and human connection. And so I think that means that we're probably always going to need buildings and offices, which is good news. And perhaps also the requirement for reducing the footprint of buildings may not arise, just a change in the way that we use them with a greater emphasis on social and well-being aspects. And I guess that's the S in ESG. And as this slide here says, that's so often overlooked. But the pandemic has increased the need for us all to consider our social value and purpose in all aspects of our lives. And that's true too in the corporate world, with 62% of occupiers and 51% of property respondents agreeing that the outbreak of COVID-19 had increased the importance of corporate social purpose for businesses. And our global investors go even further, actually, with almost all of them being able to articulate their corporate social purpose and believing that a company with a social purpose could add up to 30% to its value. So clearly this is a win-win for those businesses with it already embedded in their culture. It's a different story, though, when we come to look at the E of ESG. When we asked, although we've been talking about this for a while, there still seems to be some disconnect. When we asked about the importance of environmentally sustainable buildings, just 32% of the property industry said that it was very important, and that's compared to 77% of the investors. So this signals how vital this issue is to those looking to protect and grow their investments. And it's a similar story when it comes to occupiers, with 65% saying that they would even be willing to take a pay cut to work in a sustainable building. So on top of all of the other benefits, we underestimate the importance of this when it comes to attracting and retaining talent. But it's very much a journey still, and there's a way to go. As you can see here, 21% of the real estate sector believe that there's still room for improvement on environmental performance, diversity, and social contribution. But that's why we called this report Real Estate Reset, because despite what's happening globally, far from being overwhelmed by the economic situation, as a sector, we're actually starting to demonstrate greater environmental and social purpose and thinking more about the buildings and communities of the future. And so I guess the final question is whether we can keep it up. In my opinion, with more and more businesses adopting policies similar to this here from Aberdeen Standard, I think we do have a good shot. And that's everything from me. I'll hand you back to Adam.
Great, thanks Tanya, and you know, lots of interesting findings in that report that I think really sets the scene for the discussion that we're about to have. If I bring the rest of the panel back with us now, and we'll get cracking. So if I could just start off by asking each of our panelists just to briefly introduce themselves. So Gavin, if I could start with you, please.
Hi, Gavin Taylor, Regional General Manager for Far East Consortium.
Great, thank you. And Jessica?
Jessica Bowles, I'm the Strategy Director for Brentwood.
Great. And Adam?
Adam Varley, Head of Commercial at Scarborough International Group.
Great. Welcome, everybody. And I'm sure Ben mentioned in the introduction when technology was preventing me joining you right at the start. You know, happy to take audience questions as we go through this session. So you can just press the Q&A button at the bottom, type your question in, and I will weave them in as we go along. So if I could kick off, you know, the pandemic accelerated change in all sorts of ways of last year. Jessica, how would you say it's changed real estate in the region, and which changes do you think might be permanent?
Thanks, Alex. And just first, thank you, Tanya, for such an interesting presentation and for the report that you produced this year. It just really feels to me so of the moment, and really asking some of those pertinent questions. And I think, Alex, that ties back to your question about what changes we're seeing and what might be permanent. I mean, clearly this has been an extraordinary year, one that we could never have expected, and everything has felt different at various points in time. But what we've talked about a lot, as you would imagine, within the business, is how this is accelerating trends that we've already been seeing. So this question about is the office dead, or cities dead, or are we all going to work and go back to the office 5 days a week, feels to me like a sort of rather false argument, because we haven't been thinking about that for quite a long time. We've been thinking about this flexibility that our staff have been asking us for, that people who work in our buildings have been asking for, both flexibility in terms of time that you're in offices and in workplaces, but also how those workplaces serve you. So how you create more flexible environment and more social environments. And I don't mean, you know, party environments necessarily, but those where you can come together and collaborate and share ideas. And we've seen that starting to happen, and we've seen that coming through in the products that you see in real estate within the cities for quite some time. And I think that trend will accelerate. And of course, COVID made us all think, what on earth is going to happen? What's happening to the, you know, there is going to be a recession. We are living with very difficult times. But actually, if you can see through that period, what I think you see is a intensification of the change that we'd already seen happening. And I love the stuff about those thoughts around ESG, and you know what we know from the last financial recession. And I'll stop on this point, but the last recession, all of the wind that had got behind the environmental and climate change movement within the sector went out the sails immediately, and it took very many years to start coming back. Whereas this particular crisis has turned everyone to face into that issue. And I think that stuff around sustainability in the property industry being 32%, I'm sure as a sort of sentiment of something that needs to change, that needs to climb. And I think that the investors, being so far ahead of the property sector, will see that gap closing very rapidly, because as soon as you start getting your investors saying this is important to us and this is what we're going to put money into, you'll start seeing changes from what's being delivered.
Absolutely.
Change.
Great. Gavin, what's been your analysis of the last year?
Carnage, absolute carnage. No, I think Jessica and Tanya covered quite a few good points there, and specifically around this element of corporate resilience, how we look inward to our employees and how we facilitate an environment for those guys. And whether that's tech-based, whether that's trying to replicate a level of social fabric in the office. What we've experienced is that a lot of people crave that, a lot of people look to that, and it plays a significant part of individuals' lives over and above what we expected. People talk about working virtually into the future. I don't think it is, and I think that there is a place for and a home for individuals in the workplace, and I think that that's healthy. I suppose the one thing that we haven't touched on in the conversation today is the effect on how we look outwards. And it is around, again, corporate resilience and how we engage, A, with our consumers and B, with our supply chain. There's a hell of a lot in terms of still implications around cash flow and supply chain and the hit that that's going to bring into the new year. We are beginning to address the way in which we procure, but probably COVID has been an accelerant of that. Traditionally we've been transactional in the way that we procure, and we need to get ahead of that. We need to get educated, and we need to be more collaborative. Just in terms of the consumer base, everything is turning towards that community aspect. It's not just about building assets anymore. How does that asset sit within the local vernacular? How does it sit within the local social context? And that's becoming particularly important to our consumers.
Yeah, and Adam, obviously Scarborough operates across the north and in a range of asset classes. Have you seen any changes in the recent months, or has the business started to shift its focus in any direction?
I think we've been obviously living this year through the eye of the storm, and you can effectively go down one path and pivot in a completely different direction as things change. And the vaccine clearly, and the prospect that has given in terms of business confidence, can also just shift your complete thinking from where you thought things were going, whether that's pursuing a different type of asset class or just rebasing the type of office buildings and retail environments and residential communities that we're creating. I think Jessica and Tanya and Gavin's comments ring true in the sense that we've got to adapt, and the pandemic has been accelerating trends that we were seeing within particularly the workspace and the office environment. And I think that's a positive, to be quite frank, and it shouldn't be something that we neglect to take advantage of as we come out of what has been a dreadful year for obviously a number of reasons. But what we can't effectively shy away from is our involvement in the real estate sector and how that impacts on people's lives, whether that be the communities in which they live or the places and where they go to work. And we've been challenging ourselves throughout the year in terms of what do we think this pandemic is going to have an impact on the type of product that we're building. It's interesting, the statistic that Tanya talks about with the investor market having a greater emphasis at this point in time. But to be quite honest, it's the occupier as well. And there's a war of talent going on, and it's the stick that will beat us as developers to a certain extent to make sure that we are creating those environments that really resonate with businesses and their own agenda that they have around ESG and corporate social responsibility. But you're right, we've got to be minded of the fact that we're here effectively to make what is a dirty word, I suppose, in certain worlds, profits out of all the schemes and that we do. And we can't ignore the fact that we are a business ourselves and we are delivering the environments as a function of that. So, I see the pandemic has been an accelerator, absolutely, of a lot of trends that were happening, both in the built form, but also in the way in which we use those spaces.
Just on that point, Jessica, Business Desk ran a story this morning about Brentwood's Piccadilly scheme and about a lot of, the progress and how that's trying to be positioned slightly differently and be more advanced. How do you see occupier demand, and what is it that occupiers are looking for now that they weren't, a couple of years ago?
I think one of the main things that we're seeing is that desire for collaboration, and not just within a company, but between companies and businesses. So 111 Piccadilly is a brilliant example of that. We've created much more shareable space, and we're seeing that customers are prepared to take smaller spaces for their own private offices if they've got shared spaces that they can use in more flexible ways, with meeting rooms, with lounge spaces, with kind of semi-social spaces, and spaces that you can use in very different ways. So, you know, that focus for us has been built into this sort of, as we've reimagined and redeveloped some of our portfolio, and we've been looking to inject that into it. But it is that sort of thought about customers wanting to engage with other customers, and that's not just SMEs and small businesses. We're seeing that from large businesses as well, seeing the value of having their corporate entities broken up a bit, if you like, and injected with the life and vibrancy that you get from a more mixed group. It's a very you know, we see that happening within the science and tech sector and in innovation districts, but it's really interesting seeing that coming into a more city centre portfolio too.
Yeah. And Tanya, I think, you know, professional services firms have been, you know, making this shift for a while. You know, long gone have been kind of the grand corner offices, you know, and the gatekeepers, corridors they had to get down, and has moved to that open plan collaborative idea over the last few years. How does, you know, the idea of collaborating outside of the firm but within the building, you know, how attractive is that an idea?
I think it's a very attractive idea. There's definitely the drive for more collaboration within the business and within the firm. So as a personal example, we've just taken an extra 10,000 square feet in the Manchester office, and we're going to have a lot more of a collaborative hub in that, so that we can integrate and communicate with each other better. But I definitely think that even outside that situation, in a wider arrangement where you've got shared spaces, I think that's what people want, because they like that community aspect when they come to work. And so the opportunity to mix with other people and have that shared space is certainly appealing.
And Gavin, you mentioned the word community as part of your answer earlier. How do you make that step between, you know, kind of open plan spaces and actually something that's used and useful and doesn't just become dead space? How does that thinking happen?
Well, look, we were quite fortunate in respect that we're incredibly young. You know what I mean? We've only been in Manchester 4 years, and we've only been in this office 3. So we've designed that from scratch. And you know, our office orientation and layout is geared towards that water cooler effect. It's all about the magic that happens outside the meetings and the interface between individuals and the innovation that comes with that. So it's naturally occurred, really. You know, I mean, it's not something that we've taken legacy issues on board and we've tried to adapt. It's been there from the outset, and it's probably been our golden thread since we established in Manchester.
Okay. And we mentioned earlier on about the role of investors and how they are driving change. You know, Jess, you said, you know, the stats show that they are so far ahead. How does that have an effect, and how does that change what your kind of internal planning and thinking is doing?
It's made my conversations about ESG with our finance director much easier. I mean, actually, as a business, you know, we've had you know, this sense of broader purpose beyond building buildings for, you know, it's been part of what makes Brentwood, and the idea of creating great cities and great places to be is sort of what directs us, and those ESG themes of sustainability and social impact, and for us, cultural vibrancy, are what makes brilliant cities. And so in everything we do, we're trying to look at where are the opportunities, what should we be doing, how can we push ourselves to be a bit more, to be more ambitious and to deliver more impact into our cities. So, for us, I'm really delighted that the investor market is saying the same thing and is giving us a similar drive, and that our customers are also wanting to see improved environmental standards and what we're doing in terms of our commitment to our communities. And so having that kind of collective push means that we feel very we feel pleased because it goes with the grain of what we're trying to do, but it also starts making very much it makes commercial sense to do so. In refinancing loans, you get preferential rates if you've got serious levels of ESG commitment, and the like. So there's a that sort of collective push towards creating something bigger than building some buildings is you can see that happening, and you feel like you can make much greater progress if you've got customers, supply chain, investors all aligned.
Great. We've got a question in from Gemma Lennon, which I'll point towards you, Gavin. Gemma's asking, do investors and developers research and implement an appropriate ESG strategy together, in that early stage? And do they look at whether the space will benefit local communities with housing, leisure and employment and the like? Is that how it works? Or
I mean, look, so let me, if you don't answer that question directly during this rant, then just please call me out. But I suppose just picking up on what Jessica said there, you're constantly under this tension of ultimately we're beholden to shareholders and returning shareholder capital. So it's all about making a profit at the end of the day. However, what you've got is an investor base within our stock exchange listed entity that value ESG. Yeah. So what you're seeing is a sustained competitive advantage by virtue of adopting these policies and procedures. And to be fair, Asia are well ahead of the game on this, well ahead of the game. Whether it's local employment, whether it's diversity, whether it's sustainability, particularly in Singapore, that they are way ahead of the game. So corporately, that war is already won. So those principles cascade down to a business unit level. Now, probably to answer the question more directly, we're in joint venture with Manchester City Council also. So they have quite high requirements in that regard. So absolutely, when we're evaluating these sites and when we're forming business plans alongside them, absolutely the ESG principles are embedded within that. And we genuinely see value in that community creation, local employment, everything down to modular manufacturing and sourcing appropriate and sustainable building materials. It's all embedded within that business plan, and there's value extracted from that, and we see competitive advantage in that.
And what's the sort of time frame between that becoming, say, a corporate goal, or something that the shareholders are committed to people seeing change in buildings that are developed?
I mean, we're quite lightweight. In terms of our hierarchy, we are incredibly lightweight. So in terms of bringing things to life, it's fairly. We do it within a matter of months. If we sign it up at board level, it cascades into projects fairly quickly. So we're taking the best innovation, whether it be from SEPI Sui housing or whether it be Singapore's approach to building material sourcing. And we've got all that good stuff that cascades into us locally on a frequent basis.
Okay, and Adam, you previously worked on the agency side, so have that view as well. How much push is from that side of the sector to implement change quickly?
It's a good point. I think wearing a consultancy hat, you've got to be at the forefront of giving advice to likes of myself now, sat on the other side of the table, and you're seeing what occupiers are dictating almost now, and if you're not providing those types of spaces, you're almost dead. Tanya talks about it in her report, in the sense that people want human interaction, and if you've got an office environment that doesn't support that with these third spaces that both Gavin and Jessica talked about, and what we're doing across our projects in the north, then you're not providing an environment that people want to go to. And the pandemic, out of anything, where we're all sat and have got accustomed to a different, more agile type of working environment, is you've got to create environments that draw people back. They're going to be proud to go to those locations. And if you're not providing those, then you're clearly going to have some challenges engaging with your colleagues. And there's a war of talent going on across the region. That was happening pre-pandemic, and you can see that in the types of environments that we've curated as developers across the north to suit and match that demand. And it is about quality. And we're seeing that in the investor market, and almost a two-tier market coming forward, where prime is becoming primer and the obsolete is going the opposite direction and getting repurposed for alternate uses and dropping out of the market, or being substantially remodeled and overhauled to align to those occupiers' specific demands and wants and needs from their office environment.
Tanya, what changes are we seeing from a legal point of view in terms of, you know, these factors moving from a nice to have or a promise into things that are set down in contracts with specific, you know, either targets or milestones?
Well, very much so. There's a massive drive to create green leases. As we know, that was on the agenda for quite some time. Where we're seeing it mostly come through into our working practice, so it's through the financial sector, and then that cascades down into the real estate sector. So the financial sector are under quite a lot of legislation and pressure to make sure that their investments are thinking about environmental and sustainable issues. And as a result of that, they then demand that within their own service contracts. So when they're looking at where they're placing their investments, they will look to businesses that have the same policies and agenda that they do. And so we're certainly seeing a lot more requirements, both in terms of the legal contracts, but also in separately how they appoint their legal providers. So we're seeing that we win more and more pitches on the basis of our own sustainability creds. And that's not just necessarily our expertise, which is exceptional, but also we are the first law firm that signed up to partner with GRESB, and we've also signed up to the UN sustainability goals as well, with ambitions to reduce our emissions by 30% by 2035. And so those sorts of credentials are what the investors and clients are looking for when they come to procuring contracts.
Yeah, great. And if I could just shift the conversation a little bit. So, you know, we hope with the vaccine rollout starting yesterday that we're now going to move to a post-COVID economy in the months ahead. And really, you know, how do we think the world, or the real estate sector in particular, will look differently and act differently? And we've got a question from Amy Davis, which I'll put to you, Gavin. And Amy's asked, you know, as developers, do you think we will move to a build-to-order environment to cater to the needs of occupiers?
Yeah, I mean, I think I've just answered that one in text, but no, I don't think we will. I think that from a residential perspective, that there is still pent-up demand in the system. And we almost need to create that market by virtue of stalling the process and being dependent and almost phasing or tranching that development. You're almost hindering this momentum that we have in the region. You're still seeing the jobs created, you're still seeing a drive from central government to promote the levelling up agenda. So we need to get ahead of the game and provide assets on the back of that.
And Jessica, we've got a question from an unnamed attendee who actually starts with an assumption, which I'll ask you about in a second. But with tenants wishing to take a smaller footplate, will it necessarily follow that you'll have more vacancy, and how will this impact on your service charge and rent recovery? And will that ultimately hit your profits? But firstly, if I could just ask about the subordinate clause at the start, you know, are you seeing people asking for smaller footplates? and how is your business looking to adapt to that?
Yeah, I saw that question come up, and it's not currently our experience. Now, that's not to say that there won't be changes later on, because we can see quite a lot of, not seeing a huge amount of movement at all either way within the sector from our customer base. But we're not seeing a sort of huge rush to downsize space. What we are seeing is people wanting to talk to us about changing the way they use the space and thinking quite hard about that. Now, at the moment, you sort of need more space because if you're going to socially distance, which despite the vaccine, I think we're going to have to for quite some time, and also people are getting quite used to having a bit more space around them. You're seeing densities sort of shifting. We've managed to get 65% of our colleagues back, a density of 65% of what we did have, socially distanced, properly spaced. That's pushing at the boundaries. So I think people are short term going to need more space or people in for less of the time, but we're not seeing customers looking for major downsizing. And we're also not seeing, what I found fascinating was we saw fewer businesses leaving us than we normally do during any 6-month period through that lockdown. And partly that's because everything sort of slightly went on ice, I suppose, but we saw very low levels of people moving on or businesses going under. So it's quite an interesting trend from our perspective. We want to see how that plays out over time. But what we will be doing is kind of working with customers about how they use their space, how we create collaboration spaces, and how we make sure that they have what they need for their businesses to work. So I do argue with the premise right now. I mean, I have yet to be proved wrong, to be proved wrong over the long term, or I'd rather not be proved wrong, but that may change over the long term, but right now we're not seeing that rush to take smaller space.
Adam, what's been your experience, big sites like Thorpe Park in Leeds and the others in your portfolio? Have you seen any changes in the demand and the type of demand?
Not in terms of square footage of space that people are looking at, but that conversation had started to change anyway. People weren't obsessed by square foot rates. It was more about the switch in hierarchy and decision making from an FD looking at pure cost to HR directors having more influence over what the business was doing when it was considering its relocation strategies, and that's borne through with the projects at Thorpe Park. And I think that partly plays to Jessica's comment about the fact that we've not seen a massive downward spiral that we had in the previous financial crash, where there was a race to the bottom and it was all about driving efficiency out of the workspace. That is not happening. We're not seeing that play through. We've not seen tenants and businesses that have been talking to us about our workspace across the north, not just up at Thorpe Park, substantially change their requirements or completely rip up the rule book of what they had and revisit how they use their workspace. It was changing, it was evolving, and for sure the current circumstances are going to accelerate a lot of change, and I think they're for the better, for one of not being overly controversial about it. But again, we've been living a really odd year, and no one's going to lose their job as a property director for making a decision to take 25% less in this current circumstances, and that might play into the reason why you've not seen a lot of businesses move this year, because Christ, how the heck do you plan for what the future might look like? And the vaccine clearly is going to change a lot of people's attitudes to relocation decisions, and we're starting to see that in the uptick of demand that we've witnessed, not just at Thorpe Park, which is an out of town location, versus the city centre, where you perhaps might think that the city centres are dead as a location. That, again, I don't think that's correct. I think all these locations and cities across the north have got their own unique offering, and they need to play to their strengths, and out of town locations do as well.
Does anybody?
And I think, oh sorry Alex, I was just going to say that sort of is verifies the research that we had in our report as well. So when we conducted our survey, although a quarter of the occupiers said that they would be potentially looking to downsize, in actual fact, the majority said that they didn't have any plans to change their shape and size of their spaces as a result of the pandemic. So that's clearly playing out in what Adam and Jessica are seeing.
Great. I was just going to ask the panel, rather than point it to anybody, to see if anyone was brave enough to say when they think city centres might be back to some kind of normal from a working routine point of view. What's our expectations?
Depends when Piccolino's opens.
What's been interesting, and we've looked at the footfall data. You know, clearly having things closed, shops and restaurants, means that you don't have people, you know, around at the same levels as you did. But actually, you can see what we've seen about sort of office work and people coming into their workspaces is there was a very marked dip, obviously, at the first lockdown, but it did come back to a sort of 35% kind of number, and you could sit through September, and it stabilised at that, regardless of what's happened to lockdowns or otherwise. Once people came back, they stayed back. And so what we need to see now is the next pushback, and that's in particular around some of the corporates, where they took a decision quite early on to send that signal that the spring was when they were going to start coming back. And that's been quite a consistent message from some of the nationals from very early on in the summer. So, you know, while what we've seen is SMEs typically and those local businesses coming back into the city centres, we haven't seen the big return of the corporates. So I think that's the piece we need to watch, and also work with those businesses to talk about, you know, what contribution we need to be making to our cities. City centres aren't just there for sort of the odd bit of shopping and restaurants. They are part of the attractor that makes the whole economy of a city region work and have international attractiveness as well as local amenity.
Yeah, Tanya, as one of those corporates, you know, has it made you focus more on, you know, what is my reason for going into the office today?
I think that's a good question. I'll speak personally. So definitely during the first lockdown, I got entirely used to working from home, and it seemed like a very natural thing to do. And the concept of going back into the office seemed quite alien. But I certainly found that once I started to go back in, you quickly realise the benefits of being there. And whether that is the human connection and the interaction, as we've talked about, Pret for me, or some other sandwich shop, which means I don't have to make my own lunch, you know, all of these things, and actually just the working environment feels more productive. So I think the point that Jessica made, that when people do go back into the city, they stay there. I think that's a real strong view that I've experienced personally, and also that I'm hearing from other people as well. So currently, I'm working at home more than in the office, but I think as soon as the New Year's comes in, I'll be back in the office the majority of the time, and there won't need to be a purpose. It will just feel normal again. Yeah.
Adam, we've got a question from John Corker, which I think picking up on Jessica's point around that 65% density. You know, if that's he is then pushing the boundaries, are you expecting a corresponding reduction in rental values? I think I can guess the answer to this question, but how do you approach that? I suppose the demand from occupiers and obviously potential occupiers who are saying, well, I'm going to get less from this space.
It's a good question. You know, are we going to see a disconnect? Possibly. I don't personally believe that we're going to see rents start to tumble, if that's the question that we're being asked, because, you know, ultimately, you know, the prime buildings will become even primer for all the reasons that we've just been talking about, because they are the space that people want. And we saw that starting to bear through in the regions where we'd made some significant progress in terms of rental growth. Part of that was an offshoring agenda driven by decentralisation of government and people seeking more efficient workspace at a rebased price. For me, at Thorpe Park, just looking across the estate, there's a whole variety of different buildings at different price points, and it's about catering for all those different types of occupiers' wants and needs. And yet, some people won't want to pay the headline rents that we're achieving at Thorpe Park, but that's absolutely fine. There's space for them to cater, and that applies across all the cities in the north. And if people were prepared to make that sacrifice over salary, which I'd be very surprised if they got presented that at a personal level to work in the most efficient building, then fine, you can offset your property costs and move to that type of building. But it doesn't take away from the fundamentals that were happening pre-COVID, and the fact that there was this attraction for the best spaces by the best employers, because it helps attract the best staff and retain their key employees. And that's a small price to pay in what is the operational costs of a business in terms of your property part. It's a small portion of what your overall costs are as a business. Staff costs are the most, and you've got to, if you want to be serious about protecting and retaining and attracting your best employees, then you've got to work and operate in the best space, whatever that might look like to that person.
Jessica, have you seen any changes in people looking for different terms based on the COVID experience? Is anybody trying to put in effectively, future lockdown terms and agree in advance what might happen if the office either isn't occupied or is occupied less?
Yeah, I mean, there've been all kinds of discussions about how we sort of manage through these issues, and there's a kind of question around insurance and around the contracts that you can sign, and but I think that we recognise this was an unpredictable event, or not an event that was clearly planned for, and very difficult to manage. But the approach we took was just to keep talking to each of our customers about what it was that they needed and wanted, and how we could support them through, because clearly it's not in our interest for for our customers to go bump. And so trying to figure out ways that work for them and us, and it's an commercial realities of the costs that you have to pay as a landlord. This isn't a sort of one-way street, so trying to do that in partnership has been important. And actually what we've seen as a result of that is we've always liked working with our customers closely, but we've got the deepest relationships that we've ever had with them, and that sort of connection is really critical, because it helps you understand what products you need to develop next, and it helps you both kind of figure out what your collective roles are in supporting the economy over the coming 6, 12, 24, 36 months, which is going to be undoubtedly a very, very difficult time.
Yes, yeah. Gavin, we've got another question come in that really points us towards the E part of the ESG. And it asks, do you feel there will be an increased responsibility for principal contractors to help developers meet their ESG objectives during the build? So, for example, considerate contractor or community engagement schemes. Is that something that you're seeing or expecting?
Yeah, I mean, look, there's some, Manchester Growth are doing quite a lot in this space. What we're trying to promote is holistic view of it. So it goes that, from developer through principal contractor all the way down into the supply chain, and how we cascade those principles and get collective buy-in into it. There's definitely something in that local employment front. There's definitely in terms of sustainability principles. I suppose it needs to be cohesive. There's some great aspirations out there at the moment, whether that's the zero carbon agenda of NCC or whether it's initiatives coming out of Poems England, etc. But at the moment, it's quite disparate in approach. So the responsibility really sits with us to pick out and select the gems within all that and champion it forward. Now, that's a tough gig when sometimes funding's reliant on them gens. So, for example, enhanced grant funding through Homes England is dependent on the level of modular. So it's all about trying to preempt the trends of the future and embedding those principles and cascading them down. It's tough. It's incredibly tough, but it's a challenge that we're up for.
Adam, I see you nodding away. Do you want to come in on that point?
It picks up on Tanya's comment about some of the fact that they've adapted their business and it's been a success. Some of their corporate statements and mission statements that they're living and breathing is born through in the work that they've won, and it's the same for us in the built environment. We succeed if we embrace these things, and yes, there's a cost that we need to factor into our appraisals and our decision making, but to be quite honest, you've seen it in the statistics presented. It's been dictated to us by both getting beaten up by an occupier who's demanding these things and an investor who's dangling the carrot for us to embrace it because they want it and are prepared in some instances to pay it for it. So we've got to adapt, and Gavin's point is correct. You know, there are some really ambitious things that we just need to look through and embody all of our advisors, right from contractor to architect to local authority, to ensure that we deliver all these agendas and initiatives that will better ourselves and our communities and the people that live in those locations.
Yeah, and on that point, Jessica, you know, and I'll ask this question to each of you in turn. You know, what most excites you about the changes that we're seeing being driven by the ESG agenda?
I think the opportunity to properly spread the benefits of economic growth and the prosperity within our cities, and you know, undoubtedly the regional cities have come on, you know, have shifted and changed hugely over the last 10, 15 and 20 years, and rebuilt themselves after the industrial declines of the 80s. But actually those benefits weren't fairly spread. And I think if we can really push on the ESG agenda, we will become more thoughtful about how we do that and how our whole communities benefit from what's happening within these brilliant cities. And I think what's interesting to me and what's exciting about it is that goes with the grain of where civic leaders are and where politicians are, where national politics is, and where where consumers are. And I think that that combination of things gives us a real opportunity to take some massive leaps forward.
Right. Gavin, what about you?
Yeah, I mean, for me, I think it's the broad recognition and almost appreciation of the principles. So you've got everybody from shareholder through to consumer that now understands the principles and are bought into those principles. The consumer attributes value to it. You know what I mean? That they see it, the experience it, they're looking for it in their product selection. And all the way up to shareholders, you know what I mean, they're looking to deploy funds into entities that have a genuine understanding and championing of these principles. So yeah, that's what excites me. I don't think that you get that broad alignment on any other principle other than making money.
Yes, we're all well aligned on that principle. Adam, what are your thoughts?
You know, it's a watershed moment for us in the property sector, and everyone, as Gavin says, has embraced this, and it's here to stay. And it's not lip service either, to be quite frank. And it's giving people a leg up. It's doing something and repaying the environment and minimising our impact that we have on both the built and the natural environment, integrating those spaces, creating amazing communities and places where people are absolutely genuinely proud to say, I live here or I work here. And for us as developers, we've got a legacy that we want to leave behind, and that's no more evidence in terms of what we're trying to create up at Thorpe Park with the integration of a more human scale development that you can walk and have got interaction with green spaces, those third spaces. And you know, we've never been at a point, certainly in my career, where we're all rallying behind one initiative with a common goal and all the parties aligning, as Gavin says, from local authority to government, the tenants, the occupiers, developers, and across all spectrums. So that really excites me.
Great. And Tanya, the final word for you.
I think well, we've been talking about climate change and the environment for such a long time, and the changes have been so slow and incremental. But for me, I'm really excited about the fact that it really feels like we're at a stage where we're starting to make real changes, and changes that will benefit the future generations. And so we're actually doing great work and great businesses about building fantastic buildings, but at the same time we're thinking about the future and making sure that we preserve the world for our next generation, really. And I think that's a really great place for the industry to be in.
It's always great to end on an upbeat note. It's been a fascinating hour, so I'd like to thank each of you for your contributions. I hope everybody listening has enjoyed the discussion and has been given lots to think about. I think, as you said, Tanya, you know, it's in a great place at the moment. I think we'll see lots of interesting developments in the years ahead. So thank you, Jessica, Adam, Gavin and Tanya for joining us this morning. I hope everybody enjoys the rest of your day. Thank you.
Thank you.
Thank you.